A lot of you saw my video back in July when the no tax on tips headline exploded everywhere. Since then, time has passed, myths have spread, and honestly, most people have completely forgotten how this thing actually works. Well, the IRS just recently released a massive guidance document explaining exactly what qualifies as a tip, who qualifies for the deduction, and how to calculate your amount for 25. And trust me, there are some surprises in here. Today we're going to unpack this notice and go through some of the most common FAQs you have been asking so you know exactly how to protect your deduction and avoid IRS problems. On our last video, we took a high-level view of what that notice had to say. Today, we're going to dive into the nuts and bolts and get into the FAQs that matter to you and how you can really apply it to your situation. So with that, let's go ahead and get started. Okay, before we get the FAQs, let's reset the foundation. According to the IRS notice, qualified tips are cash tips, that's important, we'll talk about that in a second, received in an occupation that customarily and regularly received tips before 12/31/24. So we can't reinvent tips. Voluntarily not negotiated, not mandatory. Paid by customers, not an employer bonus. Reported properly on your tax forms, and not received in a specified service, trade, or business. Now that part's been temporarily suspended for 25. But they can come from cash, credit card tips, tip sharing pools, point of system systems, third-party apps, think Uber Eats, DoorDash, etc. But, and this part I want us to really set on, non-cash tips don't qualify. That includes gift cards, tickets, free meals, physical gifts, maybe a new car, whatever. Only money. Now that can be cash or that can be credit cards, but it actually has to be money. And for 25, the IRS has given you multiple ways to calculate your total because the W-2 forms, we covered that in the other video, aren't updated yet. They're not going to be on there, so this is going to be on you. So let's go over some of the biggest FAQs on this subject. At the end, hopefully you will better understand this so you can take full advantage. So let's go ahead and jump in. FAQ number 1, how do I know if my job is a qualifying tipped occupation? Now the IRS is, and I'm going to try to do all this in plain English for you. The IRS has said if your job was commonly tipped before December 31st of 2024, you are likely eligible. And examples that they've given are, and there's a bunch of them, there's a whole list if you want to go look at it, but servers, bartenders, baristas, nail techs, hairstylists, valets, delivery drivers, hotel staff, rideshare drivers, etc. And if you've looked at one of my previous videos, I've shared that list with you. They're supposed to come up with a new list by the end of the year, but we'll just have to wait and see. But for now, we can rely on that list. Now, it's important your employer does not have to list your occupation on your W-2 for 25. That starts next year. But before I keep going, if you're finding this helpful, please hit the like button and subscribe. This is not the last time, I promise, we're going to need to cover this, as there are still things that will be changing in the very near future. But back to our FAQs. Now the second FAQ I have for you, do my tips still qualify if my employer is a specified service, trade, or business? We read that a second ago. The law originally said if your employer is an SSTB, think beauty, fitness, consulting, entertainment, etc. Your tips don't qualify. But the IRS realized that this is confusing and difficult to implement. So for 2025, this year only, the IRS is not going to enforce that rule. And that's created a transition period until final regs are published. What does this mean? That means if your occupation is on that tip jobs list we talked about, then you're going to be treated as eligible even if your employer is technically an SSTB. And that's a huge temporary win for us this first year because who knows how this is all going to play out over the next few months. Now, number 3, FAQ number 3. What if my employer doesn't separate tips on my W-2 this year? This is a big one because they're not going to. The IRS says you can still claim the deduction using one of 4 methods. We can use box 7 on our W-2 where our tips have normally been reported in the past. You can total up the tips that you reported to your employer using that monthly tip report. Remember the Form 4070. Any amount your employer voluntarily lists in box 14, but I don't think that's going to be big for us this year. And then tips you report on in 4137 if you had unreported tips. This flexibility only applies to this year because W-2s won't be updated until 2026. Now, if you don't track those tips, you might lose thousands of dollars in deductions. This is going to be on you. Even as an employee, you're going to have to put this together yourself. It's going to create a lot of headache during tax time. So get ahead of it now, because your tax preparer is going to need to see something to justify these numbers that you're giving. And we want to make sure we're doing it right. Now, my FAQ number 4 that I put for you is, what if I'm a gig worker or a contractor? Well, the IRS has confirmed you can claim the deduction even if you're a gig worker, and even if it's not reported on your 1099K or 1099 NEC or MISC, because it won't be. There's no place for them to list it separately. So you have to use your own documentation. Think app-generated tip summaries, POS reports, third-party settlement reports, daily logs, earning statements. Gig workers, you're going to have the heaviest documentation burden because the platforms aren't required to separate tips until 2026. So there's no reporting on this at all. So this is going to be completely and totally on you, and documentation is going to be required. You got to document. I've been saying that for years, but the further we go along, the more important documentation is when we're dealing with the IRS. If you've got your documentation, you're good. If you don't, you're playing with fire. So we want to make sure we're documenting all of this, because that's what it's going to take to support it. Now, this next one, FAQ number 5, this is a big one. And I don't think a lot of people have considered this or even understand what this says. Are mandatory service charges considered tips? Now, the IRS says no. If the customers pay it, it's not a tip. This includes automatic gratuity, service fees, bottle service fees, room service fees, delivery service charges. These amounts don't qualify for the deduction. Why is this such a big deal? Think about it. You go to the restaurant, there's 6 of you, you sit down at one table. They automatically say, hey, if there's more than 6 people or 8 or whatever it is at the restaurant, your gratuity is going to be 15% or 18% or whatever they say. That is no longer a tip that's going to be non-taxable, because the person paying that tip had no choice. They were required to pay it when they came in with more than 6 people or whatever the restaurant is. Those are not non-taxable tips, which creates a real headache. How in the world? We don't even have an ability in a lot of cases to track all the tips accurately, although you should be. That's a whole other issue. This is a big deal, because unless your point of sale system separates the difference between those mandatory gratuities and the ones that were voluntary, you're not going to be able to take care of dealing with this. So that's something that's going to be critical both as a worker and as an employer starting in 2026. Your system's going to have to be able to track this for you to stay compliant. If your system doesn't do that, it's time now to start looking at how you're going to solve this, because this isn't going away. And I think this is one of the biggest things that people are not seeing. Do I still need to report my tips to my employer? Absolutely. The IRS could not be clearer on this. And this is something a lot of people don't think understand. You must report your tips or you cannot claim the deduction. This includes cash and charge tips over $20 per month. Your employer must include them in payroll for FICA taxes. If you don't report your tips, they're not tax-free. And a lot of people don't understand this. They're thinking, well, if I don't report my tips, it's okay because they're tax-free. That's not true. If you don't report them, you don't get the deduction. And part of that reason is because you have to pay the Social Security taxes, the FICA taxes, 7.65%. So even though those tips may be tax-free, you still have to report them and pay the FICA taxes. And a lot of people don't understand this, and a lot of people are probably going to get in trouble over this one. FAQ number 7, can I get in trouble if I guess or estimate my tips? Unfortunately, yes. The IRS has said you must maintain adequate books and records to support the deduction. You have to keep records. Acceptable records include a daily tip log, point of sale system tip reports, earnings statements, copies of those 4070s we keep talking about, app-based reports, think like from Uber or something like that. If you're audited, the IRS is going to expect proof, not estimates. Estimates will mean no deduction. Don't play around with this. FAQ number 8, if I'm married, can I claim the deduction separately? No. They've been very clear on this. If you're married, you must file jointly to claim the deduction. Married filing separate, no deduction. And that's a strict requirement under the law. And in a lot of ways, it makes sense. If you have one spouse who's making a lot of money, you can't get away with this with the other spouse. So that's out. FAQ number 9. Do I still owe Social Security and Medicare tax on my tips? And I covered that a second ago. Nothing changed there. The IRS reminds taxpayers that tips are still subject to FICA. Only income tax is reduced. You still owe the 7.65 payroll tax on every dollar. And once again, I think this is the number one misconception about the law. So, what should you do right now to protect your deduction? And this is important. We're going to have to track tips daily. Nobody wants to do it, but it's really not that hard. Use a paper, not likely, app, spreadsheet. It doesn't matter. Just keep consistent records. It's really not that hard nowadays. You can track that. Keep copies of your 4070s. This could often be your best record to tie out your tips, and it's going to corroborate with your employer. Ask your employer, are they going to use box 14? You're going to want to know that, but you're also going to have your own records to make sure your employer gets it right. And verify your job is on the IRS's list. Proposed tip occupations list is safe to rely on. And save all gig app summaries. Once again, DoorDash, Uber, Instacart. These reports could save your deduction. So the IRS has just given us the clearest picture so far. This is still going to evolve, I'm sure, but so far of how the no tax on tips deduction actually works. And whether you're a worker or a small business, understanding these FAQs is crucial. If this helped, hit like for the YouTube algorithm, drop your questions below, and subscribe to stay ahead of every new IRS update. And I'll see you in the next one.